Hello, Eric Reed with a mortgage firm, and I'm happy to come in and sit down here today with JD Van Gilder of Your Home Sold Guaranteed Realty. How are you today?
I'm good, thank you, sir. How are you?
I'm doing great. We just wanted to talk a little bit about, briefly, maybe the state of the market. So now, over the last couple months, and then maybe where we're headed in 2025. Nothing scripted here, but just a conversation. So how are things going for you, JD?
Well, at 2024, we're wrapping that up now. I think the market is starting to pick up as far as buyers getting more interested in real estate. The economy's looking better as far as we can see, with things going in the right direction as far as jobs and the sentiments around the market. So I feel that 2025 is going to be a good time for buyers to really get back into the market.
Yes. And we'll talk a little bit about that and some things that can lead to some people moving around more in the real estate industry. But yeah, it's been a tough couple months. This time of year is generally slower. We had some big storms in the southeast here. It's been challenging for real estate activity. Mortgage rates ticked back up a bit.
Yeah, I noticed that.
Yeah, and yesterday, it's worth mentioning what happened yesterday. So there's already been a lot of questions coming in about, did interest rates come down because the Fed cut rates again? Well, no. And a brief explanation on that is, when the Fed cuts rates, generally it's already assumed that they're going to cut rates. There was a over 99% chance that the Fed was going to cut rates yesterday. So that's already baked into to mortgage pricing, mortgage-backed securities and how they're traded. Well, they did.
So basically you're anticipating market changes and you're kind of baking that in advance.
Correct. Okay. Yeah, it'd be just like if everybody knew that Tesla was going to report record earnings. You'd see the stock go up prior to that. By the time that they report that, it's probably a little too late.
Right.
So it's an anticipation. So the rate cut, that's great. So we're continuing the series of cuts, which we all predicted. We made a video, JD and I, a little while back talking about this. But it's more about the commentary that from our Fed chief that followed that, which was about inflation continuing to be sticky. And anytime, inflation's sticky, the last thing you want to do is cut rates. So right there is kind of weird. Why did they even cut the rate? And then the other thing that kind of shook the markets was that they talked about not continuing the rate cuts at the same pace that we originally anticipated in 2025. And basically pointed to maybe a total of 50 basis points. And maybe we were thinking more of like a full percentage point by a longer series of cuts next year. So that shook markets. You probably saw this in the stock market, I would assume.
Yep, the stock market took some hits yesterday. I was watching that.
Yeah. At 3 o'clock, I was looking at all the stocks, and it was a total different market from 3 o'clock to 4 o'clock.
Yeah.
So the Dow had its 10th straight losing day. The S&P had its biggest loss since August, and then the yields went up, which means borrowing costs went up. But we're not here for doom and gloom, JD, I promise. So let's talk about maybe where we're going in 2025.
Yeah, let's talk about the outlook for 2025. That's what I'm excited about.
Yes, I am excited about it too. There's a lot of reasons to be optimistic. Our new administration coming in, there's the Department of Government Efficiency, DOGE, led by Elon Musk and Vivek. And it's pretty simple. Their mission is to cut government spending. Okay, well, that could have a ripple effect in our economy, and especially the real estate industry in general. A leaner economy, that would draw some more eyes and attention to the U.S. Treasuries. That could majorly impact borrowing costs. Another thing is the CFPB, which is consumer protection is very important.
Right.
And this department was essentially created after the housing market crisis. And we do want to protect consumers, but it's also a double-edged sword. There's some redundancies and some over-regulations, and these have led to a lot of costs on lenders.
And you know, I've noticed a lot of these redundancies myself, looking at it from a real estate standpoint. I said, well, we've done that. Why are we doing it again? And so if these are increasing costs, where are those costs going to go?
Well, to the consumer. So these costs are going to the consumer. So I'm really excited to see the impact of, you know, maybe cutting back some of the power of the CFPB, if not abolishing the CFPB at all. That combined with more government spending efficiency could lead to maybe seeing some more people make some moves in the real estate market for 2025.
Right. If we can do something to cut buyer costs, that's always a good thing.
Yeah. So
as long as we still have protection in place, of course.
There is, and there's already agencies that are looking after this stuff. So yeah, 2025. I'm optimistic that it's going to be a good year as well. Morgan Stanley recently did dropped a bombshell saying that they expect maybe the U.S. Treasury to be down to 3.5 mid 2025 and even 3.25 by the end of 2025. That would have a major ripple effect. There's a lot of things to be optimistic about. You might not see some major changes in interest rates right away, but if all these things come together, dare I say it, we might see rates even in the mid fives.
Wow.
Just think of the impact that would probably have on getting some people who wanted to get into a different home but have been afraid to leave that because their interest rate is lower. So that could be major. So right now, if you're reaching out and you're looking at interest rates and they're not too great, despite a rate cut yesterday, hopefully this information helps you, look towards 2025 with some optimism. But if you're making any moves in 2025 or have questions about the real estate industry, or you can get a hold of JD here at Your Home Sold Guarantee Realty. You do some amazing things here.
Well, I appreciate that, Eric. Another thing I wanted to mention is that, we see a projection of rates going down, and the markets are saying that that's going to happen. So one thing that I am always urging my buyers to consider is buy while the rates are higher, because you can negotiate price. When you can negotiate your price, the interest rate you can refinance. You marry the house and date the rate. That's what we always try to say, is because your rate, it's always fluctuating. You can always refinance and get the lower rate when the rates go down. And once you've negotiated that lower price, that's going to save you a ton of money in the long run over the life of that loan. So just always consider that when you're considering a buying opportunity.
That's a great line. Marry the house, date the rate. Another great line is buy real estate and wait. Don't wait to buy real estate.
Yeah, there you go. That's a good one.
I can speak of this firsthand. I've been lucky to purchase quite a few properties, and the longer you wait, if you're a first-time buyer, it's a great time to come in, simply because you can negotiate better terms. You can even negotiate closing costs from the seller, things you can't do in other markets. You said that like a true professional, because you've been through it and I've been through it with you.
Yeah.
It was a couple years back, and we were paying above appraised value on homes, waiving inspection periods, waiving appraisal contingencies. That's
a hard time to buy, because you've got no negotiating power.
And you have to have a lot of assets set aside in a market like that. Trust your local professionals. What we're saying, if you have questions, you can reach out to me. It's always just a discussion. Same thing with JD. We're no pressure here. Anything else you want to say before we wish everybody a happy holidays here, JD?
Nope, I don't have anything else to say other than if you're considering buying, it's like planting a tree. Best time was 20 years ago. The next best time is right now. So Don't hesitate.
Yeah, that's great. Well, everybody, enjoy your holiday season, and we'll anxiously watch how this unfolds for 2025.